Morning, Steve Free in Chicago with the morning grain comments. Yesterday, the soybean market gave up some of its premium. Some people think it's liquidation in front of the July 1st notice days. Also, weaker world commodity prices and talk that maybe some of the soybean demand might be delayed a little bit down the road. But bulls are still confident and waiting on the sideline that eventually we'll find a bottom in prices, and that as we get into the summer and the fall, prices will work higher. A lot of data overnight. The USDA said that corn planting was 86% done versus 85 average. Most of the western states are done. The laggers are Indiana 62 versus 77 and Ohio 51 versus 66. Had some ratings out that averaged Illinois crop 69% good to excellent versus 74 average. Soybean planting's 56% done versus 52 average. Market thinks the farmer's going to plant more bean acres in the March intentions. Illinois 51 versus 55. Iowa 74 versus 64. Minnesota almost done at 86 versus 55. In the South, it's about 76% planted versus 54 average. Winter wheat crop still rated 62% good to excellent versus 55 last year. Spring wheat crop was rated the best since 2010, 76% good to excellent versus 69 last year. We also have a 2-week forecast in the Midwest that suggests we're going to see normal to above temps and normal rainfall. Funds yesterday, pretty big sellers in beans, meal, wheat, and they bought some corn. Still have a big long in beans, meal, and oil, and a small long in the corn, and a pretty big short in the wheat market. We noticed that China's stock market and currencies were sharply lower overnight, led by iron and steel. Still, that rippling effect of lower world commodity prices is beginning to affect all markets. The 12 biggest investment banks said that their commodity revenue dropped 40% the first 3 months of 2016. As far as the farmer is concerned, right now he has sold close to a record amount of new crop beans to date. That's something that he normally doesn't do. As far as new crop corn is concerned, he sold very little. So the demand for the beans, pushing prices up close to $11, has increased farmer selling, whereas the slower demand for corn, keeping us under $4, has slowed farmer selling there. So anyway, we've got good weather over the next 2 weeks. It's hard for the market to rally this time of the year when the weather's good. We've got outside commodity markets weaker, which offers some resistance. And as we get into first notice, we've got a lot of liquidation on record spec long in July beans and July meal. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.